Okay, last week we looked at some real examples of stocks that have gained greater than 10x from Keystone's buy recommendation universe. This week we're going to look at the data. There's a recent study, a great study that was put together by Jenga Partners over the past 10 years. This was from a period between 2012 and 2022, so quite recent. The commonalities that were found in this study from stocks that went up 10x globally. 87% of all global equities are stocks that went up 1,000% or 10x or more over the past 10 years, started as micro or small cap stocks. 82% of those were profitable at the start of their ascent, and 91% had some history of profitability. So here we see the key is small, profitable, and unknown. This is one of the specific reasons that we focus on profitable small caps. But if you want further research on the subject, Hendrik Bessembinder, the famous or infamous Henry, did a study. It was entitled "Do Stocks Outperform Treasury Bills?" He studied 26,000 stocks from 1926 to 2015. His answer, by the way, was yes, they did outperform. But the key, however, in terms of our presentation here today, was the most significant variable was net income growth. Again, further evidence to support our strict adherence to looking at only and investing in only profitable stocks. More studies. There's well-documented academic research, Professors Eugene Fama and Ken French. The outperformance amounted to approximately 285 basis points from small caps annually since 1926, nearly 3% higher annually. That makes a massive return difference over the long term. If you like graphs, you can take a look at this one. It's between 1926 to 2004. Large cap stocks had an average annual return of about 9.26%. So $10,000 in those large caps from 1926 to 2004 would have grown to 10 million. Not too shabby. However, it pales in comparison to the kind of astonishing return of small caps over that period, 15.9% annual return. So $10,000, 1926 to 2004 would have grown to about $1 billion. I'm not a mathematician, but I'm going to take the billion over the 10 million. So again, now in the past 2 weeks, you've seen real world examples on the case for profitable small caps. Undeniable data here on profitable small cap stocks and their potential to produce 10x returns or outperform in the long term. I'm going to leave you with one quote from perhaps the greatest investor of all time, and a man who has openly pined for the days he could invest in quality small caps. He said, and I quote, "It's a huge structural advantage to not have a lot of money. I think you could make 50% a year. I could make you 50% a year on $1 million. No, I know I could. I guarantee that." In this context, it's unfortunate for his returns that Warren now has too much money. But unless you have several billion in loose change kicking around, you can take advantage of profitable small caps and try to find the next 10x stock. Trust me, your ability to invest in these stocks is the one and only advantage you likely have over Buffett. So we can help you use that.
Just the other day, I was saying to Ryan, another quote from Peter Lynch, which again is just so similar. He says, look for small companies that are already profitable and have proven that their concept can be replicated. He also goes on, if you find a stock with little or no institutional ownership, you found a potential winner. Find a company that no analyst has ever visited or that no analyst would admit to knowing about, and you've got a double winner. Again, obviously, you need to find good fundamentals in a company. It's not just, is there no institutional ownership? Oh, that's an automatic winner. No, obviously, that's not how it works. But again, I find that you can look at, a lot of Peter Lynch and a lot of Warren Buffett, and, they're really, pointing in the same direction with a lot of their comments and their investing styles.
Yeah, it's a good point.
Yeah.
All right.
I was going to mention, even when you're mentioning the small caps, the ones that are outperforming, you have to remember, and you looked at this a couple of weeks ago with the ETFs, is you can't just pick any small cap company when it comes to it. And I don't think that's stressing up in the Fama French model, which is what, I forget the first names, but it's always called Fama French. They actually break, they break it down by 5 factors. and the small minus big factor is just one of the five versus, and you have to worry about obviously other things even within this model. So it's not just pick small cap, you're going to do great. You can't just buy an ETF. Like, you'll have many people just say buy ETFs. You get a lot of just poor companies, which really remove the benefit of the small cap when you're looking at just a broad range of small cap companies where it's just, they try to get revenue growth, they fall apart, they dilute, they raise money, and that just disappears any investment value, really.
Yeah, and that's why I say, and obviously I'm biased here, but we can help you in that area. We focus on very specific, profitable, small cap companies with growth, good balance sheets, and a number of other factors. I mean, we went through in those webinars 10 factors, and that's 10 of 20 plus factors we may look at when we look at individual small cap companies.